Now, this is a stock which is up almost 37% from my buy point. I have sold half of my shares, booked some gains to finance the risk on my future trades. So let me show you this stock. Let me share my screen here. So this is HPL Electric. As you can see, I bought on this day, which is 8th of July. It's up almost 37%. But let's first understand why I bought here. So first thing to look at is the blue, green, red lines. These are the moving averages, the 50-day, the 150-day, the 200-day. Nicely lined up. The stock is above the three lines. Okay. So as long as it is blue, green, red, I'm interested in the stock. That's a stage two stock. Next, the stock starts to form a base here. Okay. So it starts to form a base here. There are more than 10 candles in the base, which means I'm looking for 2 weeks of consolidation. And if you look at the points in the base, the extremes in the base, see, this is 0.1. The low of this candle is 0.2. The high of this candle is 0.3 and the low of this candle is 0.4. Okay. So there are like 4 points in the base, two waves in the base. Okay. One is big, one is small. So the stock is consolidating on the right side. It is tightening up on the right side. So I took a 2.5% position at the yellow line. I just put a automatic GTT order and the stock breaks out. On that day, it goes up 7.98% on 4 times average volume. If you look at volume here and if you look at the rise here, I put the cursor on this candle. See, it goes up 7.98% and the volume is 4 times average volume. So which is a fantastic breakout. So there is no reason for me to sell the stock on that particular day. So it's very important to learn why not to sell a stock. Okay. So if you look at these two candles, why did I not sell here? It's very obvious. But what about these two candles? Now there are multiple reasons why I did not sell the stock here. Okay. Reason number one, look at the volume compared to the buying volume. The selling volume is very small, which means nobody is selling. The institutions are not selling the stock. Number two, this is natural. This is called as natural reaction by Mark Minervini. He calls it a natural reaction. He is a two-time US investing champion. He says that this is natural to happen. Any stock that breaks out, it is very natural that it could come down and test the yellow line. And that's reason number three. It is actually testing the yellow line. It fails to close below the yellow line. It pierces the yellow line, but it fails to close below the yellow line. So these are three main reasons why I did not sell the stock on these 2 days. Another most important reason is my position size. My position size itself is 2.5%. So why should I panic? And my stop loss is 8%. So with the position size of 2.5% and my stop loss 8%, my total risk on the stock is 0.2% of my portfolio, which is not huge. So I did not sell on these 2 days. Then it hits upper circuit on very high volume the next day. Okay. So here, as soon as I found that the stock is 16% above my yellow line is my buy point. As soon as I found that the stock is 16% above my yellow line, I sold half of my shares. Now, why did I do that? I did that because when you sell half of your shares in a stock which has gone up 16%, you are booking 8% profit. Now, why 8%? Because my stop loss is 8%. So I am using this profit to finance the trade finance my future trade. Okay. I am financing one more trade out into the future. That is why I sold half of my shares. Now look what happened the next day. It shoots up another 12%. So 32% rise in just 2 days. But in the stock market, 20% plus 12% is not 32%. It is actually more than 32%. It's almost 35% because there is compounding. This 12% is coming on a base of a stock which has already gone up 20%. So it's compounding. So the reason why I did not sell on this day, again, there are multiple reasons. Number one, I have a very small position size, so I did not sell. Number two, There is a rising window here. The rising window becomes support. Number three, it has gone up 12% on very high volume. So which means institutions are piling onto the stock. There is absolutely no reason why I should be selling. Maybe the stock could consolidate going forward from here, but there is no specific reason to sell the stock. Plus, I have a 37% cushion now. Okay, this distance is 37%. 37% above my buy point. Why should I sell now? The stock could double from here. And if you look at the moving averages, so this is the 8-day exponential, this is the 21-day exponential, and this is the 50-day simple moving average. The stock is well above all the moving averages. So there is no reason to panic. There is no reason to sell. Moreover, my position size is very small. So I just hang in there. Okay. How, even if it comes down, how much do I lose? I hardly lose any money. And my mental stop loss is at the is at the rising window. The sooner, the immediately when the stock closes or breaks this rising window, I'm going to sell the stock, and that will come at a profit. Okay. So that's the trade, around 37% return, out of which I have booked partial gains. I haven't sold all my shares. So technically it is not 37%. We'll have to see, wait and see what happens next. Okay. Thank you so much.